Hey, how's it going, everyone? Thank you so much for joining. First things first, let me know if you guys can hear me. If you can, we'll go ahead and we're going to talk about what happened with SPY today. And we're going to compare it with the morning notes, which was given before the market has been open. And we're going to compare it with the price action. And we're also going to talk about what to expect from tomorrow's session, and we're going to see different sectors in SPY, and we're going to see what happened with QQQ and semiconductor ETF, financial sectors, and we're going to see all these things, and we're going to make a case whether it's going to be bullish or bearish tomorrow. So let's go ahead and start it off. First things first, we had two different scenarios. We had two different cases before the market opened. First was the bullish case and the second was the bearish case, right? So this was even before the market opened. It was all given to you guys. It should be found under, if you're on from a member of the Chris Saints chat, it should be found under the Mario tab, or if you're a member of Patreon, it should be found under the Patreon section, right? So pretty simple day. The one number we had on our cards, which was 382.50. I'll tell you why 382.50 was important. This line, look at where we bounced at yesterday. If you go and read through yesterday's notes, you can see the value and importance of this 382.50 level. If you went long here yesterday, that was a beautiful trade, and you caught it all the way to 387. It was almost a $5 move, and it's crazy to the upside. So leading into today, that same pivot was there. As long as the price stays above 382.50, we were expecting for a bounce to at least 384.50, or that gap to be filled all the way at around 386 to the upside. But now, when we go back to this 1 minute charts and see what happened at the opening bell, as soon as the bell rang, they immediately lost it. They immediately lost this 382.50 levels, which opened the door for the bear case scenario. So, but my plan was a bit different, as it was mentioned over here. As if the SPY is between this 380 to 380 zone, I am not willing to take the trade at all, because that was a chop zone, especially if you're trading with the 0 day to expiration options. That is not going to work out in our favor, because the more it consolidates, the more theta it's going to eat away from our options premium. So we made it clear that as long as the SPY is between like 380 and 380, we're back in the top zone, not interested to take any trades in this area. But breaking under 380, we are looking for shorts, shorts in the sense buying puts. If you're new to the markets, the term shorting refers to as betting that the price is going to go down from your entry price. So that's what shorts means. So clearly mentioned under 380, we're going to look for shorting again at 378 to 375 to the downside. So now that the notes are out of the way, we'll go ahead and see what happened actually with the markets. This is the 1 minute chart we're looking at. They lost 380 to 50 as soon as the bell rang, which opened doors for the next number which we had, which is around 380 and change. Look at what happened. They lost 380, came all the way in contact with the 380 levels again. They were consolidating here for a while. As soon as they lost 380, the two of our bear case numbers, which is at around 378 and 375 to the downside. Look at what happened. If we switch back to the 15-minute time frame, as soon as they lost 380, they came back, consolidated for a while around the 378 levels, and then once they lost it, immediate flush down all the way to 375.42. The funny thing about this is, if you went long at the 375 levels, which was mentioned in the morning notes, you could have caught a beautiful $5 move trade to the upside. Or if you went short based upon the morning notes at 380 and below, you could have made like almost 10 points, 5 points to the downside, buying puts at 380, riding it all the way to 375 or 378, or all the way to the upside from 375. You buy calls at 375, all the way to 380 to the upside. So we're talking about 10 points move on the same day. So that's a really good trade if you think about it. So you can play both sides of the day and call it a day and then just move on. Take the money, buy some beautiful gifts for Christmas, and then just call it a week. These are those types of trades. Now, that is done with. This is what happened today. It's good for learning purposes, but it's not going to help us to what's going to happen tomorrow at the end, right? So what to expect from tomorrow? This is where we got to see how to analyze different stocks, different sectors at the end. So once you analyze all these, it's going to give you an idea on what might happen tomorrow. We all know at this point, no one knows what's going to happen, but analyzing multiple things might actually give you an idea of a high probable scenario so you can be prepared before the market opens tomorrow. So first things first, the good thing for bulls here is they recaptured this low, which was made at around December 19th, which is around 378.37. That's one good thing for bulls. And another good thing which was going on for bulls is them recapturing the 380 area, and they closed above it. So these are the two good things which is going on for the bulls, and the bulls have 2 points right now. Now let's go over one of the major holdings of SPY, which is Apple. What happened with Apple? Apple held on to 130 again. They were 130 was actually a pretty strong support, which was also the previous 52-week low on Apple. If you go to the daily charts, you can clearly see over here around the June time frame, that was the low, 130 all the way to 129.44. This is the demand zone for Apple. So they held on to it as a support again, and then they bounced off. So that's a good sign because they don't want to lose 130. If Apple is not losing 130, the probability of SPY making another new low is considerably less if you think about it. So bulls have another point here as long as Apple stays above 130, that is. Now, what about the bearish case? Like I'm talking all about bullish case, like we spoke about SPY retaking 380, SPY closing about 378, and Apple not losing 130. All these are bullish case. So what about bears? If you got puts today, what are all your advantages? This is where things get interesting. Now you go to QQQ, the tech space, the NASDAQ. The QQQ, unlike SPY, didn't close above the lows which it made on the 20th. That is something to know that if you go to the daily charts and see what happened, they actually made a new low. QQQ made a new low. They didn't recover or close above the lows of December 20, unlike SPY did. So bears have one advantage because if QQQ is showing more weakness, it's going to have a negative impact on the SPY as well. So that is something to keep a note for. Now, inside the QQQ, we have semiconductor stocks like Nvidia, Micron, TSM, AMD, all these stocks. All these stocks are tracked with an ETF named SMH. This is the semiconductor ETF. It has a bunch of semiconductor stocks in it. And looking at this ETF will give you an overall idea of how these semiconductor stocks are performing in the broader market. Looking into it, well, that looks absolutely terrible. Look at what happened. This is a daily chart. They were consolidating between 228 all the way down to 212. So this was the range which has been going on for weeks, up and down, up and down, up and down. Nothing was going on. They gave a false breakout to the upside and immediately collapsed and lost this range. Yesterday was something really, really important. This, if you didn't go short here, you missed the short here, this was your typical entry price. They went back to run a test to the bottom of this consolidation range and look at what happened today. They failed and they came all the way back down. Now, if you draw a rectangle, there is a gap. I don't know if you guys can see this right over here. There is a gap which needed to be filled. They came close to it, but they didn't fill it, which makes it an unfinished business. They're going to do it one day or the other. They might do it tomorrow. They might do it the day after. But if they do it by tomorrow, guess what's going to happen to QQQ? It's going to have more weakness because the gap is almost like $6 away from where the price is trading at right now. If they come all the way back down to fill this gap at 196 or go all the way down to almost 194, the semiconductors make up a majority of a portion in the tech space in case of NASDAQ. The tech makes a majority of a portion in case of S&P 500. Guess what's going to happen? The NASDAQ is going to sell off even further. The S&P 500 is going to sell off alongside with it because it's going to put more pressure into the tech space sector of the S&P 500 on the whole. So bears have 1 point, which is like QQQ losing the lows of December 20. And this is the second point, which the bears need to be concerned about. I mean, the bulls needs to be concerned about is QQQ losing this consolidation range. And if they go ahead and fill this gap by tomorrow, it's going to have a negative impact on the Nasdaq as well. So that is something to keep an eye out for as well. Now, let's go over the second biggest sector into the S&P 500, which is the financial XLF. If we go to the XLF space, the range, oh my days, what's going on? Let's go ahead, XLF, my bad. All right, so if you go to the XLF, there are two areas which is of greater importance. The one is about 34.44. The other is down below, which is around 33.13 to 33.12. They held on to this lows and they bounced higher. That is a good sign. That's a good sign because the XLF didn't log a new low, unlike the tech space did, the XLK, which is the technology sector. The sector which I'm looking at is XLF. It tracks the financial space. It has stocks like JP Morgan, Berkshire Hathaway, Wells Fargo, all the major stocks which deals with the banks, the financial space, right? But they didn't log a new low today. That is pretty interesting because if they didn't log a new low and if they continue to push to run a test all the way to 34.44, guess what's going to happen to S&P 500? It's not going to log a new low. So these are something to keep an eye out for. So technically, bulls have more room. There's another advantage which bulls got right now is the volume is going to be really dry. Something interesting to note here, even though we sold off like crazy to the downside, the volume picked up to the upside. Interesting. This volume is still in the average range. It wasn't a crazy volume, but it was still higher than the past 3 days. But the volume isn't that crazy high, like unlike the ones which we had over here. The average volume which we had on 13th, 14th, 15th, and 16th is at around 123 million. Today, the average volume is at around 99 million. Still higher, but nothing of much significance. So leading into tomorrow, the volume is going to be even more lighter because we're leading into a long weekend. The Christmas is here. And low volume typically is going to melt the tape higher, something to keep a note on, especially for tomorrow. So leading into tomorrow, if you're going to trade SPY, if you're trading SPY, two numbers are going to be really, really important for you. The first thing to keep a note for is 378.37. That's going to be the first most important level to keep an eye out for. If you're a bull, these 378.37 to 378.50 is going to be of importance. If you have charting software open, I would recommend you to draw a line right over there, 378.50. And now, draw this box actually comes from this gap. If you go to November 9th to November 10th, there is a big gap open. That's the red box you're seeing right now. That gap goes all the way from the opening print, which is around 387, all the way down to 380 to the downside. Technically, let's just drop it down. Yeah, it goes from 385.74 all the way to around 380 to the downside. So this is the gap. That's where the red box comes from. They already filled it, but I still kept it here for reasons. They already filled it. If you want, you can just remove it. Doesn't matter. But now it's even more clearer. The two numbers of significance into tomorrow, 378.50, 378.50 to 378.30. And to the upside, you got to keep an eye out for 380, which is the big psychological level. If they open about 380, the first level of resistance comes in at 382.50. Remember that pivot where they bottomed and bounced like big time yesterday? Right over here. Yep, there we go. They came back, ran a test at 382.50, and then gave a rip to the upside, which makes this area pretty important. So if you're a bull, if you're still holding calls, this is the first area where you can scale out on your profits, 382.50. About 382.50, we are looking for this. What is this pink line? This is actually called as anchored VWAP. Unlike regular VWAP, this is like anchored to a particular price point. That's the only difference. So I'll talk more about it in upcoming days in a video so I can explain it a bit deeper. So this anchored VWAP comes all the way from the lows of 340 in SPY, right over here. This is where this anchored VWAP comes in from. So that is currently sitting at around 384 and change. So I'll show you how to, let me just remove this so you guys can try it out too. So if you go to over here, no, not there, the trend line section, if you click on this arrow, there is something called as anchored VWAP. Once you select it and click on the candle over here, which is around October 13th, you will see the anchored VWAP, which is at currently around 386.25 and change. This anchored VWAP is taken from the lows of the CPI, like this 13th, where we made 340 lows in SPY. It comes all the way from there. Look at what happened. Look at its significance. We never closed candles above it. We tried to peak above it, got rejected. This is the daily time frames, and this anchored VWAP is being a massive resistance to the upside. So tomorrow, if they break about 382.50, watch out for this anchored VWAP at 386 to be tested again. And if the price gets rejected, well, you can buy puts again around this area. So this is what's going on with SPY and QQQ. As long as it's about 378, watch out for 380. If it's about 380, watch out for 380 to 50. About 380 to 50, there is a high chance that they're going to run a test to this anchored VWAP again, which is at around 386.20. So that being said for SPY and QQQ, I know that most of you guys have one single question which has been repeating over and over. Tesla, what's going on with that stock? If you guys have never seen a capitulation and how it actually looks like, well, this is a good example. This stock is going to be on history books. Trust me, it's going to happen. One of the most overvalued stocks in S&P 500, leading into a recession. That is a recipe for disaster. The markets are not usually kind to these overpriced, under-delivering sort of companies. Tesla needs to prove that it can keep up with the valuation, and the market doesn't believe it. The market doesn't believe that they can, because especially into recession, people will be struggling to buy foods with what money that they're going to buy an electric vehicle. Simple logic. Oh, in long term it's going to work out. Well, yeah, maybe, of course, in long term it's going to work out, but if you are holding the bag on Tesla from here all the way to here, and then the Tesla bounces from $58 to $100, it doesn't gonna matter if it's gonna work out or not. Yeah, it did have a massive rally from $58 all the way to back to again $100, but still, how does it gonna help you? It doesn't matter. So if you're holding the bag on Tesla, I would recommend you to like look into your position and manage the risk accordingly. We might get some bounce along the way. We might get a bounce all the way up to 167 from where we are trading at right now as well. It is an equally possible scenario, but still, the trend is still to the downside. And if you look into 2023, and if you believe that we are going to get into a recession, you got to ask yourself, are people going to buy the stocks? You got to understand that the market is always forward looking. The market is always going to price in what's going to happen into the future. That's what forward looking means. When the recession actually hits the markets would have already been bottomed. The markets will be pushing up when we are actually in a recession. That's how it is. You can look at the statistical data. The stock markets always bottoms like 2 months before the recession actually hits it. That is something to keep a note for. So right here on Tesla, if you're trading Tesla, the number to keep an eye out for is 117. 117 is important. If they break 117, well, if you want to go heavy, like most of the people call it, $94. That's your price point, 94. If you bought 140, you're screwed now. Like you're down like $20 from where you got it. And if you bought at 167, you're screwed even further. You're down like $40 from where you got it. Like percentage wise, if you want it, you're technically down like 25 to 26%. If you bought at 140, technically you're down at around, let me see, not as bad, but you're still down around 13 to 14% to the downside. So if you want to buy Tesla for long term, I understand you like the company, you like Elon or whatever it is. So watch out for 111 to 110. And if they break it, well, Tesla is going to go all the way to $94 to the downside. So something to keep an eye out for in case of Tesla. And if you're looking for long term, these are the prices for area of interest. But still, as I say always, this is also a falling knife. There are no signs of buyers stepping in anytime soon. So if you're going to take the risk, make sure to manage the risk wisely. So you don't have to buy and hold forever. None of it works like that. You can't buy and hold forever anything other than its index funds. If you're buying and holding an individual equity forever, it's going to come with its risk. Buying and holding only works if you're trading, if you're investing in SPY, especially that's what they call it, mutual funds. We call it like boomer investments. Boomer investments are always safer. I have a price target of 116. Yeah, so 116 is technically, it's gonna, I'm looking at the monthly charts here. So weekly, I'm looking at the weekly charts. 116 will be around, yeah, 117 area. It's around the lows of the week of 21st of September. So you can call it a demand zone, 116 all the way to 111. So this zone is going to be of importance in case of Tesla. If they break it, I'll say hello to 94, say hello to double digits in Tesla. So manage the risk. This is one of the high beta stocks. High beta in the sense like if S&P 500 falls like 1%, Tesla will sell off 2%. If S&P 500 falls like 2, it's going to fall like 4. Today you can see S&P 500 is only down 1.5%, but Tesla is down like almost 9%, and it was down like almost 10% at one point in the middle of the session. That is relative weakness. You don't want to see that from a company because look at this. In the past 3 weeks alone, Tesla is down from $190 all the way to like around 124. That is absolutely brutal. So if you're trading Tesla, watch out for this zone at around 117 to 111. If they lose it, well, say hello to double digits in Tesla. This is absolutely unreal. And another stock which been spoke a lot about is Amazon, which made, I guess, a new 52-week low today. Another company which is getting absolutely taken back to the woodsheds. So Amazon was holding on to this level for quite some time, which is $86. Yesterday, they even closed candle above it, only to lose it again today morning. And they gapped it lower, and they made another new 52-week low. Another ugly-looking company, another ugly-looking chart in particular. In Amazon, I like it at $81 to $80 to the downside if you want to take the risk. And you can always set your stop losses at closing candles under $80 and cut it because it is way under way under this COVID highs, pre-COVID highs of this, which is at around $108. They try to hold on to it, they're way under it right now. And now they're under the lows at which the COVID crash put the stock in, which is around $81. This was the price of the stock after the market bottomed, after the COVID crash happened. So you can sit here and think, oh, that's a great price. Like we are getting it in the 2020 price. Like, well, if you are one of those, you can go ahead. But 2023, we might get a recession. You're going to think, what are people going to buy on a day-to-day basis? Are they going to buy different shit from Amazon? Or are they going to go for groceries? Or are they going to buy grocery store? Like they're not going to stop buying cigarettes, for example. What are the companies which makes the cigarettes? Something to keep an eye out for. People are not going to stop buying cigarettes. People are not going to stop buying Pepsi or Coke. Some people are addicted to them. Some people are addicted to the beverages. They're not going to stop buying beverages. They're not going to stop buying water, especially if they're addicted to the bottled water. But they only drink bottled water. They're not going to stop buying that. They're not going to stop filling up their gas. So these are all different things that you need to analyze before investing. Anything related to food as well, like grocery stores, like Kroger's, like KSS, like all these companies, they're not going to stop buying all these things during a recession. These are the companies which usually does good because when people are still spending money by giving it to companies like Kroger's, giving it to companies like other KSS, Campbell's Soup, companies like this, for instance. Any companies which deals with food products, any companies which deals with beverages, any companies which deals with cigarettes. I'm not talking about weed, I'm talking about cigarettes in particular. All these things are what we call recession proof, though it comes with a risk, but still, if you're projecting 2023 to be ugly, if you're projecting 2023 to be the year where like people are going to lose jobs, the unemployment numbers are going to shoot up, then why will you buy stocks like Tesla? Why will you buy stocks like Amazon? Why will you buy stocks like anything. What else? Caterpillar. Why will you buy any of these companies? Doesn't make sense. This is where like stock picking, stock selection comes into play. Just because the stock went down 60% year to date doesn't mean it can't go much lower. If you're trading 2021, you must have known by now, especially if you're bag holding stocks like Square, if you're bag holding stocks like PayPal, you should know that. Roku, for example, just because it went down a lot doesn't mean it can't go down much lower. So market is pricing in a recession, bond markets are pricing in a recession. Now you got to make sure to be in the right set of companies because if you're not, you're gonna get whacked. That's what's gonna happen. The stock pickers market. Something to note: even though the S&P 500 is down like 20% year to date, more than 20% year to date, there were still some companies which did pretty good. LLY, for example, all the healthcare, most of the healthcare. Let's go over Merck. Let's go to the 12-month chart and see what happens. This is the 1 year time frame. Look at this. In this last year alone, Merck was up almost, it's currently trading at their new all-time highs, by the way. The Merck was up almost 46% in 2022. 46%. And S&P 500 was down how much again? S&P 500 is in a bear market. Let's go over LLY. I don't think LLY is still at the near highs, but still. Yep, there we go, LLY. Even though today it was down like 1%, it is still trading at the new all-time highs. Like, look at this. From the open to close, the LLY was up like almost 36%. Well, that is something to keep a note on. And any tech companies, let's go over CVX. Chevron, even though it's down from its peak, year to date, this stock is still up like almost 140%. If you count, not 140, I'm tripping, my bad. Yeah, almost 61% year to date. In the last 2 years, 2021, 2022, the stock was up almost from $84 to 189, 125%. When I say it's a stock pickers market, this is what I mean. Energy outperformed the relative indices in 2021, 2022, and here we go. Healthcare outperformed, energy outperformed. There are some stocks like Monster Energy Drink. When I spoke about beverages, check this out. The year-to-date performance of Monster Energy Drink is around, it's actually up like 6% year-to-date. Though it's not higher, but S&P 500 being down like 20%, beverages companies being up, that's something to keep an eye on. PepsiCo, let's keep an eye on what's going on there. Same case. You can make the same case over there. Another beverage selling company, Pepsi, it's still up. It was at one point up like almost 8%, and now they're up like almost 5.5%. I hope you guys get the pointer. I can keep on going, but still, the point is, this is a stock pickers market. You've got to make sure to structure your portfolio in a way where you are not more exposed to these growth companies. Like, for example, Tesla, Roku, Amazon, all these are growth. Even though it used to be FANG, like people, 2020, 2021 was absolute worst years if you are just starting out in the market. Though you might have made a lot of money, but well, that's not the right time to learn. I mean, as the saying goes, bull market can make you money, bear markets make you a better trader. So something to keep an eye out for. What's going on? Let's go on with the chat. I have a price target of 116. Yeah, we already covered it. Like, yeah, it's a zone from 116 to 111. Not trading Tesla, but I was shorting Rivian. Oh, Rivian, another shit company. Let me see. All right, Rivian. What's going on there? Holy shit, $19. Oh, the 12-month chart was even more interesting. This year, this stock went from 106 to $19. How fun. Look at the monthly charts. They're testing their all-time lows. Interesting. Around 1950. Well, if you guys want another shot, beautiful shot that is, there you go. You can set your alert on Rivian at around $19.25. If you see Rivian opening under or closing candles under 19.25, short it, risk-defined play, risk-defined trade, that is. If it recovers to $20, you can always cut it for a small loss. Technically, what you'll be risking like $20 to $30 on this trade. And if they do fall from these levels, well, that's going to be a beautiful trade. You never know how low this can go. Maybe $12, maybe $10, maybe 5, maybe 3. We never know. Something to keep an eye out for. If a stock is making a new all-time lows, you can easily short it with your stop losses at the previous lows. For example, over here, right now, let's say tomorrow they open at around $19 and they go back to 19.25 and get rejected. So you can buy puts with stop losses at 19.50. So technically you're risking 25 cents. So if you're buying like $19 puts with 25 cents, you'll be losing around, if the delta is 60, you'll be losing like around $10, $10 to $15 maximum per contract. But if it goes down to 18, 17, 16, 15, we never know. If it goes down all the way to these numbers, you're going to be up massively. So if you want to go long, this offers another opportunity as well, as long as they stay above 1925. Right now, it does give a good opportunity to play the upside. We never know. So let's say that they are going to like bounce from here, 1925, that is. They're going to bounce. They can bounce all the way up to like $24 to the upside, alongside with Tesla if they have a short squeeze. We never know. So this is interesting. So if you can go long with stop losses at $19, or you can go short with stop losses at 19.25, they open under it. So these are two different trades which you can trade. And by going short, you're going with the trend. By going long right now, you're betting on a counter trend rally. So with both trades, the risk is defined. I believe they're being added to NASDAQ. Well, Rivian? I mean, yeah, well, I mean, if they are adding it right now, they're going to remove it in another year. Yeah, just kidding. Like, let's see. That's good for them. So being added to the Nasdaq. Let's see. I hope like they keep up with it though, with their earnings and stuff. Amazon is already selling a lot of Rivian from their end, so let's see. Like, only there's a lot of EV companies that are emerging, which are going to be more competitive to the Tesla in itself. So let's see. I think it's hard to compare this recession with any other. Back in 2008, you had to go to a trader to buy and sell. Now you can do it on your phone in 2 seconds. Retail confused markets. Well, in 2008, you're correct technically. Yes, you gotta call the exchange to make the buy or sell orders. I'm pretty sure 2000s it was even bad. I think 2008 you had the electronic way to buy and sell orders. Not quite sure, but yeah, I got to talk to my uncle about it. He was trading during the 2008 time. He lost like almost $1 million, and when I told him I'm gonna start with stock market, he was like, "Yep, nope, you're not gonna do it." And I didn't give a shit at the end, but still. 2008 was wild. That's why, like, when I speak to people in 2008, that's what kind of surprises me, because the stories which they say, they were like the streets used to be empty, the shops, all the shops, most of the shops used to be closed, and the casinos used to be empty. It was that bad. The unemployment was crazy high, and that was real bad. But right now, even though the inflation is going, like, people are wondering why, like, even though like unemployment numbers are not going down, the prices are still staying elevated even though the Fed is increasing the interest rates. The main reason is this: people are still willing to spend, people are still willing to pay these higher prices. This is what the CEO of Kellogg's told, like, I think two earnings before. I found it pretty interesting. He was like, as long as we know that the people are willing to spend higher prices, but that doesn't mean we can keep increasing the prices for much longer period of time, because at some point people are going to say no. Even though like these greedy corporations keeps increasing their prices to increase their profit margins, but at some point consumer is going to say no to these prices, and it's going to hit their profit margins. That's why markets take a hit every time we get into a recession. That's why stocks like EVs, for instance, get absolutely knackered during recession, because no one is going to buy an EV. When you can't afford a food, how can you afford an electric car? So it doesn't make sense. So these are the sectors. Healthcare, for another example. People are not going to stop buying medicine because they're into a recession. That's the reason why healthcare outperformed the broader markets because they're pricing in a recession. The healthcare does good. Like food and beverages companies do good. The companies which sell cigarettes, companies which sells packaged waters, all these things does good in a recessionary environment. These are safe stocks. That's what you call it. So coming back to retail confuses the markets. Retail doesn't account for a lot of volume at the end of the day. Retail does have an impact, but not a lot compared to the funds which has been flowed by the banks, for example. So yeah, the banks still control the markets. That's what they call smart money, but I do believe that the entire statement is stupid because not all smart money is actually smart. You can find some dumb ones, like for example ARKK, for instance. What's Miss Cathy is doing? That'll be interesting to see. ARKK. Oh, another day, another low. The new 52-week low for Mama Cathy. Interesting. Isn't it funny? This stock is. If you're in 2020, like I used to see a lot of TikTok investors saying that ARKK is like S&P 500 and it's the safest investments you can have in your portfolio in your ROTH. Nope. Look at this. Let's see how far they're down from that high. Oh my days, they're down like almost 80%. Absolutely insane. All right, boys. So if you're gonna invest in companies like this, I mean, you do you, but I don't know. Kathy was expecting a deflation. I'm pretty sure she's right. I like her. I respect her for economic views, but her stock picking doesn't make sense to me. I'm pretty sure she knows better than what I do. I can't blame her for it. I can't criticize her for it. So I respect her. I still watch her weekly economic updates on different how the economy is going. She gives it through data backed up with statistics to make her case. So if you guys have never tried it, go to ARKK YouTube channel, and I would recommend you guys to watch the entire 40 minutes. Every week you get an update from Cathy Woods herself. So go ahead and check it out. She's been forecasting a deflation in 2023 for quite some time. So, and I do agree with her thesis, and I do believe we're going into a deflationary environment, and I do believe that the 2023 inflation is going to go down at a much higher rate than the Fed is anticipating. So Nvidia, another semiconductor stock which got taken back to the woodsheds. So 150 is important. It's pretty said 150 is pretty important in Nvidia, which was the lows we made on November of 22nd. So 150, 136 to 150. If they break under it, watch out for 145. If they break under 145, they're going to go all the way down to 140 and change to fill this gap. So that is something which you're watching out on Nvidia. What's up for with Nike and Meta? Nike, I was looking into Nike today, to be honest. Nike was actually something which I have my eyes on to go short potentially if this weekly candle couldn't recapture this 118.41 area. I shorted Nike at this 118.40 yesterday after they reported their earnings, and then I secured profits at 114 today morning. So something to keep an eye out for on Nike as long as they stay above. If you want to short it, 118.40 is your stop loss. If they close candles above it, you can just exit it for a small loss. So let's see how the weekly candle closes. That'll be an important thing. Like, because if you go here and if you add moving averages, if you go to the weekly charts, they're under the converging 50 and the 200 SMA. So if they close tomorrow's candle, and if they open Monday anywhere above 115.68 to 116.57 zone, I wouldn't short Nike for until they go under this area. Something to keep a note on. Nike 115.68. You can note it down. Sticky note stuff. 115.68 to 116.57. That was like the convergence of the weekly 50-day moving average and the 200-day moving average. And above that, we have a small area, which is the highs of this local highs around this August 15 time frame, which is around 118.47. So if they close the week above these two price points, we might just consolidate between this 118.47 to all the way down to this zone, which we just spoke about. If they break under the zone, and Nike is going to have a reversal pretty quick. Meta was just trading within that range from last I saw this. Let me go back to this time frame. This chart is absolute mess. Meta. Yeah, they're still in that range. Interesting. All right, so the Meta has been trading in a range so far. Pretty interesting stuff. The range is between 113 all the way to 124. That was the range. So as long as it's trading within the range, just play the range, buy calls at the bottom of the range, buy puts at the top of the range, and done. So we got to wait and see. If they break above this range, we can play this gap fill all the way at around 131 to 130 and change to the upside. In order to do that, Meta needs to break and start closing candles above 124. This is the trade if they break above this consolidation range, this gap fill. If they break under, oh, there's a lot of gaps to be filled to the downside. The first level is 108. If they lose it, watch out for this first gap at $96, the second gap at $90. So it depends on which way the consolidation range breaks. We're going to have a huge potentials for multiple potentials for the trade. If you're not in yet, it's okay. You can set an alert to the top of this range and you can set an alert at the bottom of this range and wait. Best trades comes if you're patient with the setup. You don't have to predict that it's going to go down and buy puts at this point when it's literally sitting in a no man's land, and you don't have to buy calls predicting that it's going to break up so you can take the trade all the way to 130. That's not how it works. Stay patient. Set alert over here. Like just draw two lines, right click on it, add alert on the trend line, and click on create. And now the trading view will notify you if they break above this trend line. Same over here. Add alert on the trend line, create. That's it, done. So if they break down, you'll get an alert. If they break up, you'll get an alert. So you can wait until one side gives up. If bears are winning, you will know. If bulls are winning, you will know. Like you don't have to keep an eye out for it every single day. You can just set an alert on TradingView and you can just get it on your phone directly. And once you get the alert, you can fire up your plans. Simple as that. Apart from Rivian, I'm also short on PayPal, ARKK, and Long Baba. Interesting. I actually like Chinese equities for 2023. Hear me out. So, technically, this is my thesis. So, according to everyone, China reopening back in the midst of 2023 is going to be bullish. I disagree though, because Fed is raising interest rates in order to cause a demand destruction, right? They want the unemployment rate to go higher. They want people to be jobless. They want the unemployment rate to shoot up. And they want people to spend less. And once all these happens, inflation comes down automatically. So now, if you are reopening an economy by adding more supply to an already weakened demand, it's just going to add on to the deflationary pressure to the downside, which strengthens the case of what the bond markets are pricing in right now. The Fed right now, according to their forecast, in 2023, inflation will be at 4.2%. In 2024, it's going to come back to 2.1. I say that's bullshit. I believe that in 2023 end, inflation is going to be around at 2%. We're going to see a massive decline in inflation, pushing us into a deflationary environment. When China reopens, it's just going to cause even more demand destruction because the supply just went up even further. The demand is still not there. The people are not willing to spend because at that time, the economy is already in shambles. So this is when the Federal Reserve starts cutting rates to improve, which is already late. They'll cut rates to bring the inflation back up to the median rate. But I see the scenario we are in similar to that of what happened to Japan before. We're going into a deflationary environment, and we might stay in a deflationary environment for quite some time. They messed up the economy by injecting a lot of liquidity for multiple years without doing anything about it. And I don't think they're going to fix it in a matter of a year. It's going to take a while for economy to fix itself. So let's see how long it's going to take. It might be a while since, it might take a while for a new bull to be formed, to be honest. We might be in a sort of a consolidation type of markets in case of 2023 unless something changes. So let's see. So if you guys have any other questions, let me know. We can go over them. And leading into tomorrow, SPY concerned, as long as they stay above 378.50, well, the trade to 380 and 382.50 and 386 is still in the cards. If they lose 378, watch out for 375 again. And this is where I'm planning on going long for a counter rally bounce. It's at around 372.99, which is around 373 and change. If they do get to this level tomorrow, I'll be looking to trade long-term calls on SPY with tight stop losses and breaking under 370. So let's see. Let's go over AMD. What's going on with AMD? But all these chip companies. Oh, AMD did fill the gap. Interesting. AMD did fill the gap today at around that 62 area. Leading into tomorrow, the important level is still at around 63.61. If they break under it, the next level of support comes in at that gap fill at around 62.31, and all the way down, they might come down to run a test to the $60, which is the breakdown candle over here. If they do lose it, if they do lose this low, which is at around 63.50, I like buying puts on AMD all the way to $60. So this is something which I'm looking for, especially with the weakness in the SMH semiconductor space, which also has a big gap to fill to the downside. Something to note. PayPal, is it a good buy? Nope. I mean, see, it's up to you. For me, I wouldn't buy this. I can't tell you what to buy and what to sell. If I were you, I wouldn't buy this at all. But it does seem like risk-defined trade is there. If you want to take the risk, please, for love of God, cut the losses if it breaks under $67.65, because that was the previous 52-week low. If a stock made a new 52-week low, start closing daily candles under it, we don't want us to keep losing. I don't know if you guys checked out the video which I posted a while back about married puts. That is an option strategy which you can do if you're going long or buying 100 shares in a particular company. So let's say you're buying 100 shares in PayPal at around $68.57, all right? As soon as you buy it, you go to your options, you go to the put section of the options, go 3 weeks out and buy a $69 or $70 puts. You might actually like spend around $600, but with your $6,800 initial investment, $700 is nothing. It's like when you buy an expensive ass car, you might be spending some money for insurance, right? The same concept, same scenario. You won't drive an expensive car in the streets without an insurance on. Why will you go long on a downtrending stock without an insurance? When you buy the 70 puts, even if that PayPal the next day falls all the way to 63, 60, 58, $56, it doesn't matter. The $70 puts is going to act as a hedge. And if by expiration, let's say PayPal closes at $40, the market is still going to exercise the $70 puts and going to sell your shares, which you got at $68.50 at $70, regardless of where the stock is trading at the moment. If by your options expiration, if it expired under 70, the market is going to sell your shares at $70. It doesn't matter where the stock is trading at the moment. So you can find the video in my channel. I've explained it much deeper with an example over there. It's called married put. That's the strategy name. I will write it down to you guys in the chat section. Married puts. So you can find this in my channel as well. So go ahead, check that video out. That's an interesting strategy where you can take advantage of the options to your favor to protect your long-term positions. Tesla, how much low it can go? That's an interesting question. Well, can it go much lower? Yes. How much lower it can go? 116 to 111. Can it go lower than that? Yes. If it go lower than that, how low it can go? To $94 to $93 to the downside. That might be the place where you can start establishing your position for a relief rally. The first level comes in at 111 to 116. The second level comes in at around $91.30. That's how low Tesla can go. If they break it, well, say hello to $63 in Tesla. Very much possible. 63.50 is the AVWAP from the IPO price, where the Tesla is IPO'd at. You see this pink line which is coming all the way from here? That is the $63.50, which is the AVWAP from the day where the Tesla gave a debut to the market. 63.50 will be the destination in 2023, most likely. So that being said, thank you so much for joining, everyone. If you guys have any other questions, let me know in the comment section. I'll be happy to answer. And if you guys just joined and missed out on what to expect on SPY and QQQ, once this video has been uploaded, go and check out the first 20 minutes of this section. We have spoken about what to expect in SPY or QQQ leading into tomorrow in particular. So let's talk about Roblox. Will be the last talk we cover. Are you bullish on stocks? Nope. I'm not bullish on macro. I am bullish on particular stocks, but not bullish on market as a whole. As I said before, it's a stock pickers market. I can be bullish on beverages company. I can be bullish on cigarettes. I can be bullish on companies which sells water. I can be bullish on healthcare. So, but I can't be bullish on EVs. I can't be bullish on Amazon. I can't be bullish on social media companies. Nothing. So, all software companies, another one. Adobe, like companies like that. Nope, I'm not bullish into 2023. Nope. All right, now Roblox. Interesting chart, consolidating in a bearish flaggish pattern. About $26. If they lose it, watch out for $24 to come by, and if they lose 24, watch out for 21.81. $26.08 is very important in case of Roblox. They're just consolidating in a bearish flaggish pattern in the daily chart. If they break down tomorrow, watch out for $24 to be tested. If they hold it at support and start bouncing, there is a gap to be filled at $31, but in order to fill that, they need to take out $30 first. Depends on what SPY and QQQ does. You might take the trade on it tomorrow. So if SPY and QQQ gaps up tomorrow, well, we might test $28.45, and we might go all the way to test $30 to the upside from this area. This is an important area to watch out for. That's what I think about Roblox. This chart is not looking good. I'm talking about short-term trades. At the end, they might just give a bounce to $30, get rejected to make a new 52-week low, or all-time lows, I guess, right? Yep, the new all-time lows as well. So something to keep an eye out for. So thank you so much for joining, guys. Really appreciate it. And I'll see you guys tomorrow morning at 8:30 in another live stream. Thank you so much.